Oh my god, Palantir just had a blowout quarter with huge surprises and even more. And honestly, I'm super impressed. They beat on top line customer counts, and most importantly, the future is looking bright from management's comments as well as guidance for the next quarter and full year 2025. And the stock also seems to love it too, hitting $104 in after hours. But let's just dive right into the quick rundown of earnings. So, starting out with the presentation here, top of mind for their quarterly achievements, and there were a lot. First, unsurprisingly, they acknowledged their employees earned those stock appreciation rights or SARs, and even if there is a drag on the financial results today, they earned every bit of that compensation. Personally, that $131 million was earned, and considering the results we got for it, you'll see it later on in the earnings. And it was also kind of refreshing too for management to come at it from the perspective on how it helped the company versus an added expense. Now, next is Warp Speed, big partner names showcased with Panasonic Energy, L3Harris, Anduril, and Shield AI. But the quote is just bonkers, where Anduril's chief information officer is quoted saying they've seen up to 200x efficiency gains in their ability to anticipate and respond to supply shortages. That is completely transformational for any organization, and other companies for sure will take notice and hopefully sign up to at least try out Palantir's products now. Then another big one with Palantir extending their long-standing Army Vantage partnership for up to 4 more years, depending on the options, of course. Nothing at all to sneeze at considering the contract is worth several $100 million. Then Palantir Pre, where they give customers a chance to basically sprint and learn to use their products better, and they got a few quotes here. They've got Conagra Foods, Nebraska Medicine, and Clarios. So first here with the raving reviews from Palantir getting safer and better with the food supply, then to also tons of use cases lined up in the healthcare space, and then partnering and reducing a 4-hour process for multiple people down to just minutes. Palantir is literally selling itself once customers try it out. Then also the first DevCon, where they continue to build up the army of people who can develop and use Palantir's products. This is a major step for any software company where, yeah, you can implement it, but in the end, someone will still need to use it effectively to actually create value. So DevCon 1 is huge not only for spreading more skills, but also because other folks may build their entire startup on top of Palantir and scale this over time. And DevCon 1 could be a big factor opening up that skill set and possibility to do more. Now, my favorite is Cleveland Clinic, who is a top health system in the world. We saw their CEO annual address about a week ago, name dropping Palantir as the platform they built Hospital 360, but they got to showcase here the slide with those awesome improvements here in the top right corner. Then also Palantir's continued growth in the government business and handling their certifications and obtaining the highest levels of authorization. Then Rio Tonto, getting their unmanned trains running 24/7 and using Palantir's Foundry and AIP to orchestrate and optimize these routes. The future is literally now with automated unmanned trains moving resources back and forth, taking away people from the less desirable and dangerous jobs. Now it's time for the money here and the metrics. First, we've got GAAP net income, and it's very important here they put the distinctions. Palantir usefully pointed out the GAAP net income figure and how it was affected by the stock appreciation rights, jumping from 7 cents a share down to only 3 cents a share. So officially on the record, they technically only made $79 million, but without the SARs, it would have been a pretty big jump from $144 million to $165 million, or about 15% quarter over quarter growth. And this is also a similar story for the operating income. They are still positive, so their business is making money, but it did drop down to only $11 million after the SARs. But here's where Alex Karp made a joke too, the rule of 40. They smashed this out of the park and are clearly outperforming their peers, where if 40 is the baseline, maybe it should be the rule of 72 or 80. Karp clearly knows that they are blowing their peers out of the water with this and beat themselves up pretty good too in the beginning, considering they were even below this a couple years ago in 2023. Honestly, I don't even care if they expand this more. Staying at these levels for future quarters is already very impressive, but the more the merrier, right? Now, the big kahunas here, the revenue figures. Now, there are several slides like US revenue growth highlighted first at 52%, and this is for good reason, of course, because this is where all the growth is happening. But they also break down US commercial and US government, and we got to do a pleasant surprise here that yes, commercial is expanding fast, but US government is also a juggernaut on its own now at 45% for the year-over-year comparison. If their lumpiness comments back in the day on the US government meant something, then maybe we can't expect this to continue, but based on the overall sentiment too of the call, concerns were not brought up about this. So when adding in international to the mix, and there was a specific comment too by Alex Karp on the call, which I'll go over later, we clearly see the drop down for commercial now 31% and government to 40%. So the interesting point here is that commercial revenue percentage-wise dropped significantly, adding international, indicating that the United States is the clear driver here being dragged down. And for government, on the US side at least, is their major market, so the drag from international is just much smaller because it's a smaller piece of the pie anyways. But regardless, overall revenue smashed 30%, and with the even bigger baseline, we hit 36% year over year. Remember this number because it may sound familiar when talking about guidance. Now, not only did their top line exceed everyone's expectations, but their operating income and margins exploded. So they're making more on top and keeping more of it, minus the SARs, of course. But 45% is just wild for this metric, where they note investing aggressively in AIP and the United States, but they are driving their operational leverage at scale still. Now, maybe the biggest surprise to me also is the customer count. They break this down several times, so US commercial count, the bright spot, but also the overall customer count and overall commercial customer count. We get a mind-boggling 73% year-over-year growth rate in US commercial customer count, but most impressively, actually, to me, is the quarter-over-quarter growth rate of 19%. This blasted out of the water the previous 2 quarters, where I kept bringing up wanting to see them actually perform here, turning this around, because it is the precursor to revenue expansion and showing if AIP bootcamps are bringing in the new sign-on customers, even if they're not spending a lot today. And this trend is the same for overall customer count and overall commercial customer count, where the sequential has skyrocketed. Plus, Palantir has made it into the new threshold of 711 customers now versus 629 just a quarter before. Now, another great point too is their deal closures. We knew there was a lot coming down the pipeline for Palantir and being able to keep their business going and recognizing revenue. They closed 129 deals of at least $1 million, 58 of at least $5 million, and 32 of at least $10 million. These deals at all levels exceeded last quarter, and for fun fact, there was only 16 deals of at least $10 million since the last quarter, but that literally doubled here to 32. Palantir is locking down customers who are willing to pay tens of millions of dollars, meaning there is something of value, and it's not some one-off fluke. This is 32 deals in one quarter that big. Now, the cash pile treasure hoard, we have now $5.2 billion ready for Palantir in cash and treasuries. The flexibility and safety in this company on a cash basis with basically no debt means they will be around for the unforeseeable future. Anyone worried about safety and at least existing as a company shouldn't have that for Palantir, who have been responsible stewards for continuing to sit in cash and treasuries to at least accumulate some interest while we're in this rate environment. That doesn't necessarily warrant as much opportunity cost for these billions of dollars unless it were to drop down. So it will be interesting to see if this trend changes at all for future quarters. Now, guidance for Q1 2025, Palantir is expecting revenue between $858 million and $862 million. If you do the math comparing Q1 2024 revenue, hitting $862 on the top end of this guidance would indicate 36% year-over-year revenue growth. So that's literally the growth rate they just hit for this quarter. Coupling this with a reputation for sandbagging, who knows what the conversation will be 3 months from now. If 30% is even in discussion too, it sounds like with optimism, 40% might be brought up very soon. And for full year 2025, Palantir is expecting big growth, $3.7 billion, and tons of cash to continue accumulating for the company, with full year 2024's figures of $2.87 billion. Hitting the top end would indicate full year growth of 30%. So it's one thing to achieve 30% quarterly, but for a full year of growth, we just have to see it. And I got to remind about the sandbagging too. Management seems optimistic, so who knows what the full year 2025 estimate will be by Q3's earnings results for this year much later on. And then hidden away as well, net dollar retention. Palantir has gotten this back up now to 120%. I know it's been hidden and was a point of contention, honestly, actually, where expanding revenues within their customer base was questioned as this was falling. But now it seems this has been trending back up, so we'll continue to monitor this even though it's still a small point. Now we're on to the earnings call. It is as you expected with these kinds of results. They shared many customer data points on how they've saved time and money, but also the gains that in different industries show how far and wide reaching they are as a company. They're able to tune in and get these customers' problems solved and at scale. And after the financials and in Alex Karp's intro, he even joked if we should even have one of these calls after results like this. They hammered down on the point, they're still in the early innings, and this trajectory of growth is going to be bigger for them later on. Then we get to the questions. They first address explaining the ontology and why no one else is rushing to make this competitor here against them. Essentially, they pointed out how it wasn't a product people are to make anyways, at scale at least, if they're focusing on their own business. Palantir started out in decades for the government, and they needed to develop the ontology and ensure government controls and securities around data where effectively and efficiently they ingrained this into their products. And the product born out of this necessity developed into what it is today, and for the necessities around AI working with your data in the safe manner it is. And then there was another question from retail around DeepSeek, which is at the top of a lot of folks' minds as current events, where they basically went with "I told you so" and note how LLMs are commoditized. Now, they also bring up the importance of national security and the longstanding contention against China in this AI arms race. But essentially, DeepSeek was proving a point for Palantir and how their products and operationalizing the AI itself are even more essential and really the only solution besides trying to do all the hard work yourself. Then we got Dan Ives' questions. He did have a little breakup in the beginning here if you were on the call, but he asked about the sales cycle and if management was surprised at how quick it's going. Based on the customer accounts as we just saw, this is accelerating, but for management on the ground floor, they aren't surprised. They are seeing the excitement from customers who are getting their hands on the software and are able to implement their own use cases quickly while reaping the benefits there. There wasn't any hesitation in their excitement, and Karp even jumping gave his perspective on international, talking about Europe at 14% of their business, but only 4% growth. They just culturally aren't jumping in to adapt to the new technology, while companies seem to be diving ahead first here, reaping the benefits of AI, at least in the United States. So Palantir is getting the call and doubling down on the US, who no doubt might need to even wait for a cultural shift out in Europe if they want to catch up. Then we got Mariana from Bank of America. She had two questions. The first one around the new administration, and then Palantir's view, especially as they bring efficiency, while the second question is about where they're investing to meet the demand, which I'm super interested in. So first, Palantir gave the expected answer. They're happy to help and improve the United States and the government. They aren't worried about losing business because they actually work and bring value, but importantly noted some incumbents might be sweating and may have their heads rolling because of the coming cost cuts. So very positive from management's perspective. Then for the second question, tactically, they are looking to keep getting quality engineers. From my perspective, this is huge for continually widening the gap on their innovation and improving their products, but also assuming there's a sales and implementation aspect here where quality engineers are necessary and needed to continue building use cases and teaching customers how to use the products at Palantir and making sure they can work and hit the ground running. So we covered a lot here. Palantir killed these earnings and the stock is reflecting that, over $100 a share in after hours, clearly over $200 billion in market cap. We'll see how this turns out for the next official trading days and if the multiples expansion will be maintained. They're technically expensive if you just go by traditional metrics, but this is the kind of growth with more to come and may outweigh that. It's purely up to you though, not investing advice, but let me know your thoughts below and I'll see you in the next video.